this is going to be the charting part of the class for Sunday, April 13th, 2025. And we're going to first start off by looking at this Euro USD trade from last week. I do try to post on TradingView weekly. Like I'm just trying to get into a better posting schedule and just scheduling stuff ahead of time. So I'll be posting more trade ideas in the chat, but I'm still going to do a weekly one on TradingView. Um, I don't know how this can help you guys at all. I'm just telling you, like, this is my posting schedule. So this is what I posted on last Monday. And one thing I like about TradingView is they don't allow you to edit your trade ideas after 15 minutes. Like you can't edit the title, you can't edit the chart, you can't make any changes. So everything that's here is just raw and real. And I really started posting on TradingView just to really hold myself accountable for my trades because I felt like I was having a lot of success and a lot of losses too, in private. But I felt like at the beginning of my trading journey, or more so and in the middle from where I am right now, like 2.5 years in, I wasn't really posting as much losses because that was embarrassing. I'm not a loser. Why would I post that? But I just was like, it's part of the process, and sometimes we lose. So I just started posting on TradingView to hold myself accountable, and I really love it, because you can't make changes and you can literally see everything play out. So this was the trade from last week, and this is why I decided to take it. Um, it's the text version down here, but I'm actually going to show you guys on the chart why I decided to go for a buy, and then we're going to see it play out. Um, so first and foremost, it wasn't last week, but 2 weeks ago, when we talked about doing a deeper chart analysis, I talked about how we can start to focus more on the momentum of the candles to help us make a decisive decision for if we're going to get into that trade for a buy or for a sell. Now, if you guys remember how many candles show strong momentum, can you just drop the number in the chat? And if you don't know, I'm going to tell you. So I'll give you about 5 seconds to answer. And yep, it's three. So the first thing I noticed just by looking at this is that there were three bullish candles right here. And I was like, okay, now just because I see three bullish candles, I'm not going to automatically jump in for a buy, but I am going to continue my analysis and ask myself those other questions. Like, for example, is the market near an area of support or resistance? And in this case, we can see that I marked the previous day's low and I also marked the previous day's high. Now, when the market opened, it actually pushed off of this level and it continued to go up. So that was another bullish confirmation for me. Now, this is even before I get into my indicators. And it's not that I want you guys to rush your analysis. I definitely don't. But I want you to know what to look for, um, and what to add to your confirmation checklist so that you can make better judgment in your trades. So we have positive momentum on the bullish side, and we also have the market rejecting the previous day's low to go back up, which is another strong bullish sign. So if you guys can see that, just drop a 7 in the chat. Right? Just like if there was going to be selling, we would have the three candles pick up, right? We had three bearish candles right here. And I know you're probably like, well, it was bullish again. Yeah, it was bullish, but another sign of a selling market is a lower high, right? It never got as high as the previous high. And selling momentum actually did push up and go down. So those are things I was looking at. And the last thing, of course, on my chart is my stochastic. I talk about the stochastic almost every week, probably for the last 3 years. And I had my bullish confirmations on there. I mean, if you guys use the stochastic or recognize the bullish confirmations in this trade, can you just go ahead and comment what they are in the chat? There should be about five that you can list or name, and I'll just start to name them as well. So the stochastic is facing up, which is a bullish confirmation. The blue line is above the orange line. That's a bullish confirmation. I also see that my stochastic has crossed above 20, right? And for me, the best time to enter a trade is when the stochastic is near 20 or 80. I find that those are the best entries because you can stay in the trade a little bit longer. And whenever I'm analyzing and I see that my stock is near the 20 or just crossed up, like I said, like 21 or 22, plus I have all of these other bullish confirmations, I'm like so excited because that's a really good entry for me. So we can see that even here, that is when the stochastic actually crossed above. And that's in conjunction with it being at this level of support. So you guys say it crossed above 50. Yes, that it has. And the blue line has also crossed above 80. So it's just so many bullish confirmations. Like I always say, 3 is good, 4 is great, 5 is fantastic. So more blue candles than red, stock facing up above 50. Can't see the MOM or EMA, which are usually what I look for as well. Yeah, so you have your confirmation checklist, everything saying buy. Now, I already marked the previous day's high, right? So that's a potential TP right off the bat. When you're in a buying trade, to find your TPs, you just want to look for previous key levels. And we're going to talk a little bit more about key levels today because I feel like if you can understand that concept, you will literally have the confidence in yourself to trade with no indicators. You're just going to be like, I don't need that because I'm focusing strictly on price action. I don't know if Whitney is here, but she's a big price action trader and her win rate is impeccable. She's an amazing trader and she focuses mainly on those key levels. So the first TP that I put was the previous day's high. Simple, easy, right? My stop loss would have been probably at this low, right? Or right below this low. Um, you could pick either or because this is really up to you. And then my other TP was just at the swing high. And the swing high is just the highest point that you can see on your chart. So I didn't really do anything crazy. I just looked for, like I said, is the market near support and resistance? Is the momentum supporting the buyers or the sellers? What is my stochastic doing? Set my levels, set my buy stops, going up. And then I just went from there. And we can see that this trade played out. We're just gonna hit play here. And TP1 was hit and TP2 was hit. I think TP2 was actually 1.10900. And then this TP was TP3, 1.11349. So this trade went in our favor just because we followed those simple steps and it just happened to work out. So I like that a lot. So if you guys understood why Euro USD actually bought, um, based on what we talked about, just drop a 7 in the chat. If you have any questions about this trade, you can also ask them in the chat now or any trade idea. And Alicia, when it comes to trade management, I have really gotten better at just using key levels. Again, if you guys have been with me for a while, you know my stop loss in TP. First, my stop loss used to be like when I started posting in the money chat around like I don't even know how many years ago at this point. My stop loss would be 25 pips, and then my TP would be 25, 50, 75, 100. But I would never let it go to 100 because I'm just like, I got 25 pips. I'm good. But it's just like over time, I just learned to follow my trade, keep taking positions on the same trade if it's still moving in my favor, not really move around too much, and really focus on those key levels for setting my stop loss and take profit. Now, it may seem like a how do you deal with drawdown? Like drawdown when the trade is actively open and I can see it in the red? Or what do you mean? If I lose a trade and now I have to make the money back, like what do you mean by drawback? Which one? I mean, the trade is gonna be in the red sometimes. Like if you noticed, no matter what trading app you're using, but specifically like MetaTrader 4 is just popping in my head right now. Whenever you enter your trade, it always starts in the red because you're gonna owe the broker. So it's just like, okay, it's in the red. And then you also have to understand that if the market was going to be consistently going up or consistently going down, it wouldn't be any drawdown. But when you see the red in your trade, it's just literally the market trying to find its footing. Like if we look at this trade right here, where we entered was it had to be here after these three candles. We entered here. Now, this was our entry candle, right? Now, if we set our stop loss at the previous low down here, the trade would have never hit stop loss, right? So even though we're in a trade for a buy right here, when this candle is happening, this red candle is happening, all of this below our entry, our trade is in the red. So we could be freaking out and like, oh my God, our trade is in the red. Or we could just let our stop loss do the job, right? One thing Mark Douglas said, and I quote this a lot, is just because you set a stop loss does not mean that you've accepted the risk. What's the point of having a stop loss on a trade if you're just going to be freaking out when it goes in the red? Like it has to do that because it has to test that level to see is this truly an area of support or is it not? So even though we were entered here all of this time, let me just take the stuff off. Even though we entered here, this entire period of time, which is about, mind you, we're on the hour time frame. So that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 hours that your trade was in the red. It didn't hit stop loss, right? If you guys are following along, drop a seven in the chat. We didn't hit stop loss, but we was in the red for 13 hours. However, once we actually broke structure, right? Which we probably should have waited for anyway, now that I'm looking at it. Once we broke structure here, and then we started to retest this resistance as support, now we're in profit, right? So this drawing's getting a little sloppy. So this is our entry candle, right? Now we're in profit once we get here. We're in profit. So you can either close your trade in profit once it's in profit and you got out of that little bit of consolidation. And that's what most people would do. And that's probably what I would have did too, because I would have been like, I know I did not just struggle in consolidation for 14 hours to not get no money. No, we still have to just wait it out, right? Because even if we're in that trade, now it may come back to the red. Like it may come back down to the red because this is our entry, right? So we're in the red. It's like, oh no, we're in the red. But we still didn't hit stop loss. Now, if we're watching this trade actively, just think with me for a bit, right? Just think about your blood pressure, right? Think about your anxiety. You're just like, I'm in the red. I'm in the blue. I'm in the red. I'm in the blue. Like, if you've ever gone through that mental process of literally, like, imagine, like, literally watching this trade for 14 hours, you would just be, I don't know, you would just be looking crazy. Like, you would be looking tired. You would be looking burnt out. Like, you would be grumpy. Like, you would just be, like, I've literally been there, done that. Like, why am I doing this to myself? Like, I just woke up to use the bathroom. Why am I now looking at this trade? Now I can't go back to sleep because it's in the red. Now I'm gonna close it just to wake up and hit TP. Like, what? Like, what in the emotional roller coaster is that? Like, I'm just being real here, guys, because I've literally been there, done all of it, and not doing that. So this is still with the trade management question, because our stop loss is still down here. Stop loss never hit. We just was in the red from our entry. Now, as the trade actually, we break another level of resistance. This now becomes support, right? We get the break here. We get the positive retest here, right? Now we can just ride it out. Now we can actually, since we got the break and retest here, you can now put your stop loss here, right? Now we got a stop loss. Our stop loss is officially in profit. And not only that, the market continued to climb and go up. So as we just follow the market as resistance becomes support, that's how we're now moving our stop loss and managing our trade. Like if you guys are following me, just drop a 7 in the chat. Yeah, it's an emotional roller coaster, RJ. Like I've literally, it's just was so crazy. Like the things that traders really do and the mental things that we put ourselves through and it's just the process is like people wouldn't believe. They would be like, you're weird. That's crazy. Why are you doing that? And it's like, why are you not doing that? But it's like that's not the way to go, y'all. Get your sleep, right? Set your stop loss and go to sleep. Because we should only be focusing on big wins, right? Small wins or small losses. If you have a big loss, you are over leveraging. Like you see the trade continuing to go down, right? You see your indicators are not in your favor, but your fear is holding on to that trade in hopes that it's going to turn around. Like we really need to learn to just let things go when it's just not going in our favor. Like not going in our favor and hitting our stop loss is like it's two different things. Like just because the trade is going down, you have your stop loss. But for those of us who want to be risky and scalp and not set a TP and not set a stop loss, because some people just trade like that. Like they really just don't set it because they have the nerves of steel and they can do that. Like that's not me. I can't do that. So if the trade is not going in your favor, you decided to not set a stop loss, but you're just going to let it keep going because it's going to turn around. No, let it go. You're wrong. You're wrong. You're wrong. Like you was wrong. So either close that trade and get it on the right side or set your stop loss, right? Now I've traded without a stop loss too, but it just be like, I don't know. Y'all know at the end of the Nile is a river when don't you be like, like it's like I personally cannot do it. I'm a highly anxious individual and I just cannot do it. So I'd rather just set my stop loss and let the trade just play out. Because I know that it's either going to hit stop loss or it's going to hit TP. And I know that I can take profit at any given time. So it shouldn't, you don't really want that stress. So, that's that. We're just going to move on to, I'm just going to just demonstrate some more like examples of what to look for your entries, for your trade management, for your take profits and all those things because it really gets simpler like the more you can really like see what's going on. Um, so again, this is just going to be a quick refresher on key levels because when you see it, is you can't unsee it. So hopefully somebody has a aha moment where you are seeing it and you can't unsee it today. So pretty much when we're talking about key levels and we're talking about whether you should buy or sell, even if we're not using any indicators, I'm just going to hide this stochastic down here. This is not going away, but we're gonna, oh, there you go. So we're gonna close this stochastic and we're just going to focus on key levels for a second. Now, pretty much if you was wanted to try a no indicator approach or you just wanted to really test out your price action knowledge, this is what you would want to look for and do. And I talk about this all the time, like break of structure, how was the market reacting around that level? But hopefully I say it a different way that just makes it more clear. So we can see that the market is I need an actual line. So let's look right here. I'm gonna just mark out some key levels here for us. And you can do this as many times as you want. I always encourage you to back test and try it out because you should. So this is Trade Locker, y'all. So let's just say this was a, maybe I'll do one line at a time, just so it's less, it shouldn't be confusing, but I'll just do one line at a time. So let's just say we marked out that this was a key level of resistance. And we're saying that this is a key level. Let's say this hasn't happened yet. So we're saying that this is a key level of resistance because we can see that the market had a break of structure here. It sold, it was selling here, it was selling here, and a few times it rejected. So in the past, we can see that this was a place to sell. If you guys can see that, just drop a 3 in the chat. Now, when we come to the other side of the market over here, the market was resisting, right? It was resisting, but we start to see the momentum for the buyers pick up here, right? Not only do the momentum for the buyers pick up here, if you see that the market is at a key level, because it's not always at a key level, sometimes it's in the middle of a trend or whatever. If you see the market is at a key level, you want to see how is the market reacting around that level? Like, is it literally rejecting heavily, like in conjunction? Well, there's no indicators, but is it literally rejecting heavily or around this area of resistance? Are the sellers still having the same energy that they had before, right? Or are they not? And if I take this off the chart, we can see that the sellers were actually running out of energy and the buyers were picking up energy. And what I literally mean by that is we can see strong, even this whole part right here, we see strong green candles forming. And if this was like, just think about it like tug of war, we can see that the green candles are literally, they're stronger than the red candles at this point in time. And once the market got back to this key level of resistance, it didn't react how it was previously acting in the past. It disrespected it and it decided to continue to buy. So you want to look at what's happening at the key level and is the same thing going to happen again? Now I'm going to take this line and I'm going to move it down here and we're going to look at this area of resistance because this is the hour time frame. So we can see that for a lot of hours, like we had a break of structure here, right? Showing the continuation of the downtrend from here. But after that, we see that the market was rejecting heavily, heavily, right? Do we see how this is an area of resistance? And this is a lot of pips for gold, right? So if you guys can see that, again, drop some threes in the chat. All these hours, this is the hour time frame. And I just want to put this into perspective for people who are struggling with gold or thinking you have to do all these things or have all these candles. Like that's just not true. Right? I'm going to get an info line and I'm just going to look at it from this 1 hour. This 1 hour candle was about literally three. Let me see, where did it start and where did it end? That's literally 359 pips. Not 359, 3,500 pips, 3,590 pips in 1 hour, right? That was a sell candle. We can look at another sell candle that was happening within an hour. That's still 2,000 pips, and that's only one candle. So the market was continuously reacting off of that level, but then we come over here and we see that, do we even see any selling candles around this previous area of resistance, right? We don't even see any red candles. Not only that, when I say resistance is starting to become support, that's exactly what I mean. This market is no longer reacting how it did at the previous key level, which confirms we should be buying now. We should no longer be trying to sell, right? If this is making sense, y'all, drop a 7 in the chat. I really want us to be able to identify these key levels and see like how is the market reacting at that place, right? I'm gonna change the time frame, because this is the hour time frame, and some of us trade on smaller time frames when it comes to gold, and I'm just going to put this here at this key level, and I'm gonna just scroll over. Well, gold kind of finicky, so it's been moving mad, so I need to find. I would need to see where it changed to. Okay, so here's another example. So we get a lot of resistance here, right? We're getting so much resistance. And remember, these are hours. No, this is now 15 minutes. So even if we were on the 15-minute chart and we got in for a sell for gold here, let's just say we was only in for this one candle because it was resisting at previous resistance. That's still 1,500 pips in 15 minutes. Yeah, and if you had the right pips, you would be straight for a week. You can do this on a weekly time frame. I'll show you guys that as well. But this is the 15-minute for my scalpers. That's 1,500 pips in 15 minutes, right? You don't have to be in for the whole entire move. So we're seeing how gold continued to resist. You can keep if you really was, I don't know, some people be acting crazy, but you can literally get in here, you can get in here, you can get in here, right? And this is over the course of probably like not even a day or so, but a couple of hours, but you're still securing. That's what, 4,500 pips if you get in 3 times at that right area of resistance. But look what happens here, right? We're having an area of consolidation almost above this previous area of resistance. Price is no longer reacting at that key level the same way it was before. You acting different, right? And what happens? Previous resistance becomes support. The market takes off in the opposite direction. So you don't need to have all of those pips. You can get a few decent candles on knowing which way the market is going, or you can really hold it and stay in for longer. Because we started here, right? But let's just even look, yeah, in the past. This is where the structure was broken. and then it became resistance and it continued to resist, right? You just look at what price is doing at those levels. Let's look at it on a weekly. Like the weekly, ooh, like I know it's a lot of people that's just so rich just off gold, just off of one candle. Ooh, look at that candle last week. Let's see how many. It's just so many pips. It's just crazy. So let's look at this. That's not an average week for gold, but I'm still curious. So we're gonna look at it from. Oh my God. Like imagine if you was using $1 per pip on gold last week and you just stayed in for that whole trade, you would have made $23,000. Like, or you could have even made $2,300. You could have made $23. You could have made $236. If you would have just stayed in that whole time. But it's the same thing. If you got the patience to hold gold on a long time frame, hey, that's crazy. Because you don't need to do all that, but you can. So we see we have this, I'll just even come down a little bit lower. We see we have this area of resistance, and this is on the weekly, mind you. So we got all this resistance. You could have been in for this from here to here, right? Always set previous lows as your take profit. But now we see not only do we have the break of structure on the weekly, we have the retest, literally meaning that structure was broken, and then resistance was retested as support, right? It's acting different. It's no longer responding the same way. Here's another example. And let me just take this off. Here's another example. It was consolidating here, right? Now, once it gets to here, it's no longer responding the same way. That just goes to show you a change in trend. And you can do hold up, y'all. I'm just trying to go to something else real quick. And you can do this on currency pairs too, of course. Um, you just pretty much look for how is the market reacting around that key level. So I'm just going to go down and put this on the hour time frame. I'm going to delete this stuff off my chart. I'm going to reset my chart. I'm going to identify my key levels, all right? And I'm going to see how price is reacting around that level. And here is an example we have here. We see price was consolidating. And then we see price was no longer treating that area the same way, and price really sold down, right? So if is this helpful, y'all? Like if this is helpful, just let me know in the chat. To confirm bigger time frames, see high and lowest key level, then zooming in with lower time frames for entry points. Yes, that is a good take, Amanda. And this is what she's saying, y'all. I will just do the weekly real quick, and hopefully this will click for somebody too. And we just gonna look at last week's USD CAD because that's the chart that we on right now. So I'm gonna get a horizontal ray. I'm gonna turn on magnet mode. I'm going to lock my price to the absolute high and absolute low of last week's candle. And we can see, I'll even put a horizontal line in blue because we can see that price was previously buying at this level and then it broke through, right? So that's just that. Um, but say we was looking at USD CAD on the weekly. Right now, we can see that what is this is a key level technically because this is the weekly time frame. What is USD CAD doing at the key level, y'all? Is it buying or is it selling currently? Well, it was selling, but right now at the key level it's buying, right? It's buying. So when we zoom in, and this is why multiple time frame analysis is really cool. When we zoom in, we're gonna go down to the 4 hour chart. We can see that look is actually being supported at that key level. It hasn't broken through, right? Even though even yeah, it's consolidating right now. So in order for us to want to continue to sell on USD CAD, we would want to wait for that break below the weekly low, if that makes sense, Alicia. Right? Because right now it's being supported, and we can even see that on a 4 hour. We're looking at the same trade, but now we just zooming in, right? We can see that uh, it's looking like it wants to buy, but we really don't know. And you can go down to the smaller time frame to find your entry. right? It's looking like it could be pushing up because it didn't actually get as low as the weekly when you start zooming in. Um, but again, just look at how it's reacting to those previous levels, like I said, on other time frames. But that's really all I have for you guys today. If you have any last minute questions, either about anything or anything we talked about today, just drop them in the chat and I will do my best to answer it. I know I did say I was going to post something in the chat, but I totally forgot. So if anybody remembers, please let me know in this chat so I can remember to do it. Um, no, I remember now. It was the trading podcast. So you can do the analysis visually, then use indicators for further confirmation. Yeah, yep, exactly. Yep, because let me see if I turn back on the stochastic. What is that telling us? That's mixy. Let's see on the four. Yeah, it could be potentially setting up for a buy. But I would wait. The what I would wait for is I would wait for the stochastic to cross back up above 20 because just because it's facing up, that don't necessarily mean that it's ready to buy right now because it could still be doing this for a while. Even on the day, it's still under it's still under 20. So yeah, I would be waiting for the stochastic to do something or wait for that break on the day. Like wait for it to break below so that you could confirm. Oh, we got our three selling candles here. So hey, it could continue to sell, but I would wait for the break because it's acting a little funny around that key level right now. Yeah, the indicators are just extra confirmation for the price action, but my goal is for everybody to be able to read indicators with candles, without candles. It's like knowing how to do math on paper and then using the calculator and then using Chat GPT where you're not like actively like thinking at all. You're just like asking for the answer for a mathematical equation. Um, so yeah, guys, again, I just hope this was helpful. I will look at the markets and do some more in-depth analysis to see if I'm going to post anything that looks good. But make sure that y'all are checking the news. Make sure you are waiting for your entry signals. Don't just rush the process and just really continue to take everything that you're learning and apply it to every single trade. Like, but that's all for today. I will see y'all soon. Not next Sunday because it's Easter, but soon. You're welcome, everybody. And have a good night. I will post this tonight. I'm going to remember to do it. Good night.